Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the New Zealand dollar to the United States dollars. And first, we'll be talking about fundamentals before we move right down ahead to technicals, which is purely what we're going to be seeing on the chart. NZD USD has dropped to over a 2-year low and is pressured by a combination of factors: aggressive Fed rate hikes, bets, further rise in the US bond yields underpin the USD, while the risk of mood also contributes to driving our flows away from the risk-sensitive Kiwi. Right now, the NZD USD pair has nosedives to its lowest level since March 2020 during the first half of trading of Wednesday, and albeit manages to recover a few pips during the early European section. The pair is currently hovering below the 0.5600 mark, still down nearly 2% for the day, and remains at the mercy of the US dollar price dynamics. Now, in fact, the US index, which measures the greenback's performance against the basket of currencies, hits a fresh 2-decade high amid expectations for a more aggressive policy tightening by the Fed. The bets were reaffirmed by the overnight hawkish remarks by Fed officials, which in turn allows the yield on the benchmark 10-year US government bond to stand tall near its highest level since April 2020. Now, apart from this, the prevalent risk mode of course, provides an additional boost to the safe haven greenback and continues to drive flows away from the risk-sensitive Kiwi. Investors remain worried that rapidly rising borrowing costs will lead to a deeper global economic downturn. Furthermore, the risk of a further escalation in the Russia-Ukraine conflict takes its toll on the global risk sentiment. Now, the fundamental backdrop suggests that the path of least resistance for the NZD-USD pair is to the downside. That side, the extremely oversold RSI on short-term charts is holding back bearish traders from positioning for an extension of the depreciating move. This, of course, in turn seems to be the only factor offering some support to spot price, at least for the first time being. Now, market participants now look forward to the release of the US pending home sales data due to later during the early North American session. Apart from this, we are going to expect speeches from influential FOC members, including Fed Chair Jerome Powell, as the US bond yields will influence the USD price dynamics, of course. And this, along with the broader risk sentiment, should allow traders to grab short-term opportunities around the NZD USD pair. Technical levels to watch from this, we have noticed two support zones very close to each other and a totalized price of 0.5597 overview and a total daily change of minus 0.0108, of course, and a total daily change percent of minus 1.89% and a total daily open of 0.5705. Now the trends, looking at our daily SMA 20, 0.597, daily SMA 50, 0.6148, daily SMA 100 to be 0.6231, and of course daily SMA 200 to be 0.649. So now what to expect from this? We are looking at a possible pull up to the upside, at least to this most recent resistance zone. So if we were to make our entry at this point and let our trade run onto this point, we're looking at nothing less than 87 pips from this trade, of course, which is good money, and a possible pushback to test this most recent support before push up back to the upside. And that's our technical analysis on today's currency pair. Now let's move over to the stock markets. Welcome back, guys. And now today on the stock market, we're having a look at AT&T. And now, what to presume from AT&T? We have been having a series of messages and inputs as regards the AT&T's dividends, saying that loving investors are dialing the wrong number, while others suggest that a US judge rejects AT&T bid to dismiss SEC lawsuit over leaks to analysts. And some people have been letting us know that AT&T CAO says that Wall Street critics are wrong about the company. Now, of course, this has been making a sharp decline on the AT&T markets, but now we are looking out for a safe haven and something more technical to boost up this double whammy we experiencing here. And of course, this has to do with presuming that a push up to this most likely fundamentals about the stock NYSE company could mean that a push up to the new zone and most likely the 16.68 zone. So we are looking out for something important news from this point, and if most likely we touch at 16.05 or 01, which is about 25 pips from this point, and push up to 16.37, which is about 30 pips thereabout, 16 pips thereabout, and more likely to the upside, we're looking at nothing less than 30 pips, of course, from this trade, of course, which is good money. So AT&T looking out for good fundamentals from this positive news as regards their dividends. And the sweet spot, of course, could make sure that these targets are being achieved before the first month of the first day of October, of course. So if we're to make an entry at this point and let our trade run up to this point, we are looking at 16.45. We're looking at 17 pips from that trade. An extension to this, we're looking at nothing less than 20 pips and even more from there, which of course is good money. Now that's our technical analysis on today's commodity, AT&T. I remain your host, Nick. Bye for now.